All right, good evening, guys. Ken at Tortoise Capital, nightly strategy podcast for January 28th, 2023, Saturday night edition. So we're looking at swing trades tonight. We'll start with a quick look at some market conditions with the 30-period regression line slope, the Z-score of key sectors. So we have most of them now approaching Z plus 1, so this has been a very positive move the last couple weeks that we've been tracking. Finance continues to be in the leadership position, followed closely with materials, tech, and SPY. It's important to notice that tech has really is starting to move into the leadership here. Tech was lagging. You'll notice the blue line compared to the market. This last week, tech has now joined and is ready to start leading. Finance, on the other hand, this green line has been it's sold off less. It had been in the highest position prior, and has been the initial leader coming out of the sell-off. Energy has was the big loser, has made a really strong move and is now starting to stall a little bit. And so those of you that were listening last night heard me talk a little bit about that in the exit for Devon Energy, because it was starting to show weakness also, and it felt like the energy sector had its run, and that maybe it was starting to roll over because of weakness in oil. So finance and tech leading the way right now. Materials have been fairly solid, but the resurgence of tech is, to me, the significant one. And here you can see a real differentiation in leadership now. That XLP, the staples, versus XLY, consumer discretionary. So staples, coming out of the sell-off, had the biggest gap to overcome, and then they took the leadership position here until the last sell-off, and now XLY has resumed the leadership. Now, that's really due to Tesla, Home Depot, who are large components of XLY, both making some recovery moves, and some serious weakness in here in things like McDonald's, Walmart, and Coke. So the growth on has started defeating staples from about here, from the mid-January onward. So that's an important trend that people are looking to reward growth right now. Here's a frame from Charles and on Merck, and he's got this framed on the weekly, daily 65-minute, and from about here on, you can, on the PSAR flip, you can feel the trend has been down. That's happening right around the, call it the 10th to the 17th. That's this line right in here. So the weakness has started over here. So on the weekly basis, this is just a really strong move that is stalling, but you can see that's become about a 10-day move. And inside that, on the 65-minute, he played the Z3 breakdown. I think probably had his stop like about there. Then out of the sideways chop, he did not take the collapsing dragon, but he did make a second position on this breakdown. So he's got two pieces short in Merck, and the first one short from 110. So that would have been this break right here. So this actually, that little Z3 break looks like this on the daily, and so he's been able to get that move on the first position. As we look back for, where is the next support level? It's really not until here. So you could call it this level where he has shown at 100. So this thing still has another minus $5 before it gets significant support. You could maybe see something here at 102, but in either case, there's still plenty of room to the downside. So that's a good trade working well. The only thing I would caution is that 2 days ago we moved into the bull, and the strength of this previous move, both on the weekly and the daily, now starts making this sell-off feel attractive to everybody that bought in through here. They got to be looking at this move and saying, where do I cut my losses? Was it here? Was it here? And now as it starts moving into this region where the value of the short trade is realized, that is also a place where price triggered buying pressure that pushed this to the upside. So as we think about support and resistance, 100 is sort of like the maximum reasonable move that you could get to. And that just, on the weekly, that shows here. If that were to break, then the next logical weekly support levels, like in the middle of all this, where he's got it around 93, and then the big break would be at about 87. So the first leg, or the next leg down, has a real strong test at 100, and then another 7% move to, say, 93, and a 5% move to 87. So then there's a whole ton of support right here. Everybody that bought that is owning this has to be looking at this price around 105 and saying, hey, that's 1/3. It's given back 1/3 of everything that I own. Is that a time to start buying, hoping it's a dip, or is that a time to start selling to lock in that gain? So that's why this is a really interesting price level here, is that it trigger. There's reasons for people to be more excited about buying and selling at that price. So that's going to bring more volatility, and Merck will be an interesting trade going forward. I like the two in position that you have. I would be looking to, I like where your stop is here, because if this does reverse, that micro loss on this one doesn't offset the nice gain that you have here. So that feels pretty good. And then as soon as this breaks below 105, I'd be looking to move that stop as soon as I could to lock in the second one, and then let it run. Here's Dan on IYR. So he's got a couple trades marked off on here. So the first one was IYR at 952. So that's this one. So he's got like a COTA 2 entry with a stop probably here. This rolled over quick, and he took a quick micro loss. The only thing that I would say on that is, if you're going to be out that fast, if your stop is here or here, that willingness to get out so fast makes you miss that trade unless you have a re-entry. Now you've got a re-entry, but just notice that the urgency to get out with a 0.15 loss means that we gave up this move. I like that you got back in, and I like that one you got out a half it here, which pays for that one, and now you're holding a half a position overnight. But that close management like that is making it hard for you to capture the gain that was there on a really strong day. And really, if you take a look at the 30-minute on this one and the strength of the PSAR, this thing swings really nicely. So, like that PSAR flip, that's leg one, pause, leg two, and we are well clear of all the previous levels. That to me, what I'm saying is, I think that's one where you got to be willing to, you know, have a risk box of probably $2. So that $2 here goes to 89. Trust the PSAR. But I like the trading plan and the discipline you're bringing to it to get some stick time on the 30 minute. Um, so I'm not saying this is incorrect. I'm just saying that that capital preservation makes us miss this. That strong bar right there. Like I'm thinking maybe the entry could have been there on the rebound. Once you clear the sell off, that maybe we could be in here instead of here, and that would be significant on the size that you're trading. This is Wheaton Precious. He wants to turbo into a core position. This is a let's see. This is 30 minutes still. This little chop has sort of yielded to that strong move, which pulled back in two legs, and now has shown some recovery. So that's if this little recovery is the beginning of a gain, then with that much risk, we probably got 2 units of reward back to here. And then if this were to go, that's where, to me, your core trade would really kick. So if you could get a turbo entry here, make some money on the way up in here, and then preserve some of that money for a commitment to a swing, you'd be in great shape there. I also like this short from here, because if that price level fails, then we're back into this chop, which means that the bottom of that channel would be around 44. So that's like a $1.20 worth of value. So if I could trade this with maybe 40 cents, if my risk box was 40 cents, in this case that's about 30, yeah, you'd have a 3 or 4 to 1 trade on the downside as well. So I'd be looking at that as a potential, but you clearly got enough room for the move to the upside. So you're in good shape on that. All right. Oh, I see Dan's in here too. Any questions or comments, Dan?
No, I agree with what you say. I think my stop on the IYR was too tight, and I've had a few problems like that. So I kind of got used to all of the intraday trading where the stops are pretty tight and you're going for the NLD for 2 really fast. And I see when I look at your swing trading portfolio that you're managing the exits more loosely to give them more time to go. And I can clearly see that I need to do the same.
Yeah, what I typically like to do on that, if I can just I'll draw a sketch on this. Is that when I see a big sell off and then I get a PSAR flip with a tiny little risk box, and I'm on the 30 minutes. I'm really thinking about 3 days worth of, there's day 1, day 2, day 3. I'm willing to leave that initial risk line in here so that this has a chance to grow. It might just be doing this stuff, and then usually by the end of a 3rd day, if that swing hasn't started to move, then this was nothing. But what makes this attractive is on the 30 minute, you've got a little more wiggle room, and then you can afford to let that grow. By the third day, I like to switch to daily bars. So I'm giving it that time to start growing early, and I don't want to try to micromanage this little stop. If I was going to manage it that closely, instead of being on the 30-minute bar, I would be trading it on 3 minute with a 3 minute sized wrist box, which is usually smaller than what you'd see on this. Now, there is an alternative to there that if you might find interesting. I don't know. Is that you wait for the PSAR flip on the 30 minute, and then when it breaks out, you buy it, and you use the size of the 30-minute wrist box as your 1R, but then dial down to a 3 minute bar and then just trade it using those signals. And then usually what that means is your 3 minute wrist box is a fraction of the 30-minute wrist box, and so you'll never take a full 1R loss, but you get really clear signals on the 3 minute, like it violates a PSAR flip or something like that, and then you're not. Then it keeps you out of trying to interpret price action inside a 30-minute bar, like the one you did. There was a breakout, and so you bought that, and then it had a nice move, and then it started selling off, and it was inside this bar, and you're saying, "Oh man, I want to get out of that. My 1R stop is down here." But there was no clear signal on the 30-minute bar. There might have been on the 3 minute. And if that's your strategy, that's fine. But what I don't want to try to do is start interpreting, like on this breakout here, if this was going up, well, what if it started selling off? Where I don't have any confirmed signal on this one until it breaks all the way down here. Then I have a clear signal on the 30-minute that a support level was violated. That's a clear technical failure. But trying to interpret price inside a bar here is problematic. But I can fix that by going to a 3-minute bar. But now I'm really a day trader. I'm an intraday trader. So at some point you got to say, in this time frame, I'm going to let this bar, I'm going to take that breakout box, and I'm just going to let that run, and I'm just going to commit to the PSAR, which means that you'd get out here.
Yeah, I think I have to try that, especially if there's no reason to not give the market a little benefit of the doubt, or the sector a little benefit of the doubt.
You got to give it room to grow. Now, this is a way that you might also think about that. So if I was here on the 30-minute, and I have this, let me draw it from the beginning. So if I'm here on the 30-minute chart, and it's actually a 9-day, but imagine I was on the 30-minute. It's exactly the same issue, because this is fractal. Now, if I'm here and I've decided that that's my 1R box, and I want to trust the PSAR, I don't get out of this thing until here. But there was a moment at the peak of this thing when I'm more than 1R into it. So it might be that you just say, with 1R in hand, I want to accelerate my stop to 1R, or you just use a 1R trailing stop. So if you get an early surge, your stop isn't following the PSAR; it's already locking in an R. Because like on this one, you'd hate to have had this move, and it's already working, and then the thing pulls all the way back to here, and
you're about to go negative.
Yeah, and you're only holding that tiny little fraction.
So well, I think if you have a clear pivot above your entry, mm-hmm. or as you say, you've already gone 1R, now you've got a better reason to raise your trailing stop. But I kind of raised it prematurely.
I think so too. It didn't have a chance to grow yet, and it wasn't at the sign that where it was clearly failing. So it's in the growing stage, and you got to give the children time to grow, if I can say it that way. So
yeah, right.
Let's suppose this is right here, and you notice that you're almost 2R in hand on that one. At 2R in hand, you might just say, let me take a 1-bar low. So as soon as that closes, you move it to the bottom of that bar. And now I've made a clear move that waits for a new low in the next bar, and I've locked in more than 1 hour. So you could have, on the longer term time frames, you can do that. Um, I'm showing this on a 9 day. So this actually works on like those longer swings too. Like here's a PSAR flip entry right here with a stop in that, and I've got that much in hand, and the R10 has started to roll over. I'm happy to get out right there.
Mm.
That's a 40-day trade because this is 9 bars. Like if I bring that all the way over here to Apple today, I've got a 1 2 3. I could have had a 1 2 3 entry right here, and this is getting ready to leave the dragon. I might be willing to buy this at 145, and then my stop might be the bottom of the dragon, or it might be the bottom of the RL10. So either one of those is a legitimate place to stop. I wouldn't be surprised if it got to 160, and that's about a 1 hour. So if this thing moves out, it hits my PSAR and then starts to fail. Is that enough to preserve? Yeah, probably. That's a 9 day bar. That's probably pretty good. Watch. Watch if I enter at 146 and this thing gets to 160. Now I'm going to go down to a daily chart and show you what that looks like. Yeah, I on the daily bar, obviously I wished that I had been long at the PSAR flip here from 130 with a $5 risk. So now I can look at this and say, if I had taken that entry here, and this thing closed well at 145, I'm holding $15 of gain against a $5 risk. So I'm already 3R in hand. And look how far this thing went below the RL270 at the max. So I have reason to believe it could go that far above. And you can already see it's made that move. It's so close. So what I'm saying is, if you had entered in here, you're really risking your reward. Your reasonable reward is still here. And you've got $15 of open profit, which is 3R, and you had an initial $5 risk. Well, where should I put my stop on that? To me, it's like, well, you can't give back more than Friday's low. Does that make sense?
Yes.
Or a 2 day low, or the edge of the dragon, or the spine of the dragon, or the southern skin of the dragon, or the PSAR, which would be about here on Monday. But to me, that's too much to give back. I'm giving back, if I gave back that much, 2/3 of my open gain against a reasonable hope to get just that little piece. That's not a good exit strategy to me. So what the PSAR will do is this acceleration factor keeps you in when it can be choppy early, but at some point there is from this entry point, there's some price level up here that says once I get out of the growing season, there's some price level up in here where I got to be preserving capital. And now maybe I shift to a 2-bar low or a 1-bar low or whatever. And so my point was, after your entry, that thing hadn't even had much of a chance to grow yet, and you were trying to interpret price inside an active bar instead of using sort of the statistical measures.
Yeah. Yeah. I agree. One quick question.
Yeah.
You using the PSAR during the growing season makes a lot of sense. I noticed when you were describing the swing trades on Friday night when I was watching the recording,
Yeah.
that you had some swing trades where you even let it go through the PSAR uh,
Yeah.
and keep going.
Yeah.
And that was after 3 days. And those obviously worked out. There was one that didn't, but two or three of them did. So what are your sort of criteria for even letting a swing trade
Yeah.
beyond the 3 day period go through the PSAR?
Yeah, if I've got I use something like a 3 minute to 30 minute to daily time frame shift, right? I'm using 30 minutes for the setup, and I'm hoping that that thing will become a nice swing trade on the daily. So as long as I got one or two R on the 30 minute, uh, I I can be more relaxed on PSAR exits. Like the intraday noise doesn't bother me that much. I just try to get, like, if I have a unit of risk and this thing has given me 1 unit of I'm already plus one, I, and I will just set a stop and leave it in place, for the day. So I might have been here and then said, there's my 1 hour gain. Let me just move and lock that in and just leave it alone. And then price may be monkeying around up in here, and I don't really care. I'm just waiting to see. I want to see it get to the end of the day above my stop, and so I'm not being triggered by all of these little. Because otherwise, if I was going to watch it that closely, then I'm gonna go. I'm a day trader. I'm gonna go down to 3 minutes and try to squeeze as much. If I'm gonna spend that much time on it, I want to get the maximum value out of it by looking at 3 minute charts. So, uh, so I really am just checking in like in the last hour or so of the day, um, and and I get little triggers like if I each time I gain an R, I might look and just lock in an R or something like that. So I'm not executing off of the immediate signal on the 30-minute chart. On daily charts, I will. I just draw that line and I leave it open for the day, and I don't make the adjustment until like 5 minutes before the close to see if I'm still in the trade. I say, where do I assume it's going to close here. Where do I want my stop to be for the next day, and just move it and then leave it. So I'm not triggering intraday on the daily charts, and probably not on the 30-minute chart. 3 minute charts, I'm triggering intraday because I am day trading at that point.
Gotcha.
So, so this, what makes this tricky to teach is that the 30-minute can either be a very slow day trade. So if I'm day trading, I'm normally on a 3. And if I'm swing trading, I want to be on dailies. So what is the 30-minute time frame? It really is being drawn in both directions. There's more wiggle room on that one because I'm trying to grow it so that I only have to pay attention to it on daily charts. So that's what I would. There's more artfulness involved in the 30-minute because it's a slow day trade that's trying to become a fast swing trade. So it needs a little more, or it's like handling teenagers. You know what I mean?
Yeah.
They're not, with little kids, you got to be really strict about boundaries and all that. And with adults, you can be very clear on your boundaries as well. But teenagers have a foot in each camp, and so you need to give them a little more room. And that's where you have to pay a little more attention to things like, what's the rest of the market doing? Where are we in the 10-day market cycle? What are the peer groups doing to decide whether, to get out or not? And as long as I've got some market money in the bank on it, and I can have a wider stop, I'm happy with that. I'm not trying to squeeze everything out of it. When I start getting nervous about those, and I'm looking at it on the 30-minute and starting to come near a decision point, the other thing is just, what's my open gain? Is that a significant enough dollar figure to then drop down to the 3-minute? And then if you're managing a lot of symbols on that, if you notice your stuff starting to think that way, just take the exit. No cognitive load.
The other thing I've been thinking about is kind of using uh, selling half like I did with IYR
Yeah.
as a way to get no lose plus dinner for two.
That's a way to do it. The only thing I will caution you on is over the long term with that, recognize that what that's doing is that you're taking your maximum risk at the earliest stage when there's no money in hand. So and if it fails, you're failing on a large position. But if you have a position that's working, you're only getting you're getting big gains on half a position, which is
Yeah.
kind of the opposite of what we want to be at. So,
But if you're exiting at the end of the day, you're
right,
also eliminating some end of day
yeah,
risk when you were on a 30-minute chart,
exactly, and
and you can move your stop down a bit,
yeah, and
to
that's why the 30-minute is a little problematic, is because that's the only time frame where the overnight gap really becomes significant. Because on a day trade, or I'm sorry, on a swing trade with daily charts, your stop is already incorporating something like respect for the gap.
Mhm.
So it's wide to begin with. The 30-minute one, because you have, 15 30-minute bars intraday, you're not concerned about the gap volatility. So as you get closer to the end of the day, cut in half to give you that wider little protection. And then what you do is the next day, if it's still working in my favor, I don't need much information to put it back on, and then
Yeah,
just
yeah.
and then manage the full
I
position.
was thinking about re-entry on Monday.
Yeah,
Exactly.
and that
Yeah,
gives you a core and turbo feel that can be very helpful. Okay.
yeah.
All right.
Thanks for all this
Yep.
coaching. It's great input.
Yeah. Hey, we'll be working the creativity thing tomorrow, regular
Yeah.
time. We're just looking at the myths and transitioning to full time work in progress for the last cohort. So I'll see you at the usual time tomorrow.
Right.
All right, that's everything I got for us today, guys. We'll get this published and posted and be ready for them tomorrow. Take good care.